Meantime, Uber shares dropping now below $39 this morning following a very rough entry to the public markets. Now it's time to talk about the next big IPO. Deirdre Bosa joins us with that. Deirdre.
Andrew, that stumble may raise questions about the fate of the other unicorns getting ready to go public this year. And right up next is Slack. In about an hour, it will hold its investor day in New York, live streamed on its website. Now, the company is seeking a direct listing, so this investor day is in lieu of that traditional roadshow ahead of an expected June public market debut. But the big questions are, does Slack look more like a Zoom or a PagerDuty? These are enterprise companies which have both soared in public markets. Or does it look more like Lyft and Uber, which of course have badly stumbled? Now, it's not immediately clear. Slack is a cloud software company, but it is also unprofitable. And over the last 3 years, it has barely narrowed those losses. Its revenue grew more than 80% last year over 2017, but that growth has been slowing. And we are just getting some preliminary numbers from the first quarter of this year that make it look like these losses are on par to perhaps increase this year. What makes Slack unique is that unlike the other unicorn IPOs this year, it's not actually raising capital. Rather, this is to let the direct listing is to let existing shareholders and employees sell stock to the public. But still, the meeting today is a chance for the startup to broadly sell its story to potential investors and that path to profitability just a few days after Uber's flop. Now, with Slack, we could get an indication of how much Uber may or may not have chilled the IPO market for the other unicorns. It's not just Slack, Postmates, WeWork, and others to follow this year.